Hello everyone, myself Vaibhav. I welcome all of you to today's session of Visual JForex, in which we are going to take a look on the moving average indicator. This time it's the turn of the MACD, moving average convergence divergence, which is a part of the moving average technical indicators which we have been seeing for most part of this week. So let's get started for the day. We will see its a brief description how the MACD is constructed and how we can utilize it to construct an algorithm of our own. So here is the MACD. If you see the short description, it's made up of moving averages. Three EMA combinations are taken, three different EMAs on the different time frames, and we have to calculate the EMA signal and the signal line and the MACD line. So here is the calculation, the MACD histogram. So these three are the constituents of MACD, and its calculation is fairly simple. Let us also plot it on the chart so that it will be easier for you to understand how it is constructed and how we can use this to help us in determining the trend of the underlying instrument. So here is the MACD, and values are the default values here, the combination of 12, 26 and 19, and here we have to define these input parameters on the Visual JForex block. So let us add a MACD block to the board of Visual JForex platform developed by the Dukascopy Bank SA. This is the MA indicate. These are all MA indicators. Now today is the turn of MACD. As we have seen plenty of times, the start point can be any of these three: the on candle, on tick, and trade event. Here you will have the brief description of how the MACD is constructed and its utility. So whenever you feel a bit confused, you can simply take a look and you will gain the clarity regarding the MACD. Coming to the input values, the default instrument, as we have seen, can be any of the instrument which is supported on the Visual JForex platform. For the day, let's change this to USD JPY, the US dollar against Japanese yen. So this is the USD JPY here. We save this. Time period we will choose as half an hourly for a change, not 10 minutes, not 1 hour. It can be any as per your convenience, so it's all going to depend on the setup. We have to change this to half an hour. Okay, and here on in the bottom you can see the MACD is being plotted. There is a block on the Visual JForex platform. Now let us go back to MACD's description. So how to calculate the MACD? MACD line is simply the difference between EMA 12 and EMA 26, and here you will have this description for the calculation. Whenever the MACD value is positive, it means that 12 EMA is above the 26 EMA, and if the value is negative, that simply means that EMA 12 is below the EMA 26. So I hope you have understood the calculation for the EMA. Now let us go back to the chart and how to use this for making a profitable algorithm. And as per the conservative setup, we mostly rely on the crossover of these MACD line and the MACD signal line. So whenever the minimum you can say that bare bone structure can be made simply using the crossover of the the MACD line and the MACD signal line. So whenever you see MACD crossing above MACD signal, you get a bullish signal. You can say that the momentum for the underlying instrument is shifting from bearish to bullish, and whenever you get a crossover of MACD below the MACD signal, you get a bearish indication that the trend is changing on the bearish side and it's the turn to go short in the underlying instrument. So that's how you can use this. And now there is added mystery to it, you can say. If not mystery, you can say that there are a couple of things which we need clarity on. Now this crossover can come any time. Now here, as you can see, it happens when these both the lines MACD as well as MACD signal are in negative territory, and in this instance both these lines, the MACD as well as the MACD signal, is above zero. And this histogram which you are seeing, these pink bars, are simply the difference between these MACD and MACD signal. We calculate the difference and it's plotted here. If the MACD is above MACD signal, then the histogram values are positive. If the MACD is below this MACD signal, then the histogram values are negative, and then as the convergence happens, these values tends to go towards zero. And mostly the use is as if this crossover has happened after prolonged move on the downside, and then eventually when the momentum picks up, and when the crossover happens on the buy side, that is the MACD is crossing above MACD signal while both these values are in the negative territory, that is considered as a sign of the underlying instrument having been in the oversold scenario is now taking turn for the better and it's starting to rise, and vice versa is considered probable for the sell trade whenever there has been big move on the upper side and after due run on the higher side after the due consolidation. This crossover happens that MACD falls below MACD signal and we get this bearish signal, and that is considered as a sign of fresh reversal. So both these instances we rely on this crossover as well as in which territory the values are. So for a buy trade, mostly we look for these MACD values to have been in negative territory, as it will be indicative of the fact that there has been already big move on the lower side, and this can be considered as a retracement move as well. And even otherwise you can consider a fresh trade even during these scenarios where the MACD and MACD signal lines are still in negative territory. Still a fresh move, fresh break happens on the lower side, and in such scenario when the trend is strong, you can indeed go for the fresh setup, fresh trade as well. So in both these instances, it's always up to you or up to anyone who is going to develop the algorithm, and you have to plan accordingly. So all you have to do is take the output values and then plot those output values in conditions. Here you will have these MACD block. So let us go on to the Visual JForex platform to see how we can use these on the Visual JForex platform to build the algorithm here. And the shape is given as a 0. If we make this to say 3, then the output value will be the output value of the candle 3 time periods back. Suppose now that we are taking half an hourly time period for USD JPY. So when we take shift 3, it will be going back in time 1, 2 and 3. So at the 7:30 GMT candle we will have this output of the MACD, and this will be taken into consideration for whichever calculation or whichever condition we want these output values to be used. And fast period, these are default values, of course. Any of you can make the changes. Suppose if you, for instance, decide to take a different combination, say let's say 21, you can do that, and all you will get is a different setup, and this structure will be altered because we are changing the constituent values. Point being, you can figure out any combination as per your requirement. So here you can see that to some extent we are seeing a change in this MACD, how it is plotted on this chart, and it has the implication for trade positioning as well. If the output values are different, if we see the crossover happening in a different phase of time, then of course the trading decisions will be different. So all you have to do is figure out the combination, whichever combination you want to use, you can do that. Now here if you want to use 30, you can do that, and there is nothing stopping you. All you have to do is figure out such a combination which will yield you the most profitable setup, and that's why the experimentation and the testing is of high importance while developing the algorithm. Now let us restore the default values, the combination of 12, 26, 9, and here you can see this change can be easily observed. Whenever we change the combination, we get a different plotted structure on the MACD indicator variables, and it changes as per the output. Now here, as you are familiar, we get these three outputs, and all these three outputs can be put in at different places, whichever variable you want, MACD signal, MACD, or MACD histogram. All these three output values can be utilized to design the requirement to fulfill the requirement of our setup. All you have to do is take some other block, or you can simply take if conditionals, and then you can carry out the comparison. Suppose if you want to do the comparison now the MACD and MACD signals are in positive territory, but you want to check on the data 10 hours back to make sure that 10 hours back the values were negative. All you have to do is make changes to this shift and adjust accordingly to get the data 10 hours back, and then you can simply carry out the comparison between the output values for the current time period as well as the 10 hours back. So that's how you can do it. You can use these output values for further calculations as well. Here we will have these mathematical expressions. So whichever way you want to use these output values, they can be used, the comparison or the calculation, and it's a very efficient indicator. It's a widely used one, and even when I started trading a couple of years back, one of the few indicators I knew at that point in time were MACD. So most people learn about MACD very early in their trading career, and it's widely used as it is found to be fairly reliable in designing any setup, either manual or automated. As you are aware, the offer side can be anything, ask or on the bid side. Then coming to the closing price, the applied price, as you might be aware, we have to use the appropriate closing price. Mostly what I do is I go with two different setups. Whenever I want the buy signal to be generated, I tend to rely on the low price of this MACD indicator, and whenever the sell trade is to be generated, I tend to rely on the high price of the indicator. So now it has been plotted using the low price. Now we also plot to show you the difference another MACD indicator, and this time we will use different combination. So here this is of low price, we make changes to make it of high price. Okay, now let me be assured once more, and edit indicator. Okay, applied price is low price, and in this instance the applied price is high price. Now you can observe the change here. This crossover is happening earlier in case of the low price MACD at 6 GMT, whereas this crossover is happening after it has already happened on the buy side. Let us do the comparison between these output values. So here in this instance, the output values are the MACD, it's minus 0.1706 at 5:30 GMT, and at 5:30 GMT the value is different for this MACD with the applied price on the high side, it's of minus 0.1688. So you will observe these differences, though not much prominent, but still whenever you have to design any algorithmic setup to trade, you have to take these considerations into account, as many times you will see any small difference can make a large difference down the line. So you have to be careful, and you have to plan accordingly. So that's it from my side for today's session. I hope you have been able to understand the MACD indicator and how to use these on the platform developed by the Dukascopy Bank SA. So on this platform, you can develop the automated algorithmic trade setup, and of course the profitability is going to depend on how you designed it. And also I would recommend that you do extensive back testing to see if the structure you have built is efficient or not, and then plan accordingly. So now it's my time to leave. I will be back tomorrow. Not tomorrow, today is Friday, so all of us will be back on Monday. Till then, have a fabulous time ahead. Goodbye.